Hi friends, welcome back. Ajao. We understood meaning of the word accounting. We understood your process, steps in your accounting. Recording, classifying, summarizing. We analyze, interpret, then we communicate. Then we understood objectives of accounting. We understood users of accounting. Then we understood accounting concepts. We understood fundamental accounting assumptions. We understood accounting standards. We understood Ind AS, Indian Accounting Standard. So as of now, two sets of accounting standards are there. Normal accounting standard and your Indian accounting standards. In your CA intermediate, we'll learn accounting standards. In your CA final, we'll learn Indian accounting standards. Let's move ahead to the journals. How to make journal entries. Yes, this is the biggest problem students don't know. They actually mug up the journal entries. We understand how to do the journal entries. Okay, so basic accounting procedure starting with journal. Now, we had one concept called as dual aspect concept. We had a concept called as dual aspect concept. Every transaction has two aspects, one debit aspect, one credit aspect. One debit aspect, credit aspect. So this is called double entry system of accounting. So accounting is done as per double entry system. Every transaction has two-fold aspect, debit, credit. And how to record both? So you need to first identify. The two accounts which are getting affected. Minimum there will be two accounts. You need to identify the two accounts getting affected. One has to be debited, other has to be credited. Minimum two. It is possible debit is 1 lakh, credit is 90,000 and 10,000 somewhere else. Debit is 1 lakh, credit is 90,000 and 10,000 somewhere else. It is possible. So then there are three accounts. But a minimum two accounts will be affected. One will be debited, other one will be credited. The first thing we need to identify is the accounts which are getting affected. For example, you're purchasing furniture for cash. Then every transaction there are minimum at least two accounts affected. I am giving the same example. You purchase furniture for cash, your cash is going out. One account affected is cash. And furniture is coming in. We have a furniture which is being purchased. So another account is furniture account. So cash is going out, furniture is coming in. So cash account, furniture account are the two accounts affected. Identify the accounts getting affected, minimum two accounts. Now, sir, which to debit, which to credit? For that, first, your accounts are classified into three categories. These are classification of accounts. Your accounts are classified into three categories: personal account, real account, nominal account. And then we have rules. When to debit them, when to credit them. So accounts are classified in three parts: personal, real, nominal. Personal account, they represent a person. Person need not be a living person. It can be an artificial legal person. So personal account relates to person, trade receivable, trade payable. Receivable I have to receive from someone. Payable I have to pay to someone. And I tell you, it need not be only real person. It can be artificial legal person also. It can be natural, artificial legal person. Like, I purchase goods from X Limited. I have to pay money to X Limited. X Limited is an artificial legal person. So it need not be a natural living person like you and me. It can be artificial legal person, and sometimes it can be a representative personal account. Okay, representative personal account. It represents someone. It represents a person. For example, owner brought money. We call it as capital. Owner brought money. We call it as capital. Capital represents owner. Capital represents owner. He's a person, na? So that capital account is a personal account. So Mr. A account, Mr. B account, Mr. C account, you're all debtors, creditors. They're all personal account. Okay, it can be an artificial legal person, X Limited, X Traders, Messrs. A and B. They are all personal account. Okay, capital account, drawing account, they're also personal. Okay, outstanding rent. I have a rent outstanding. Outstanding, not yet paid. Not yet paid is outstanding. Outstanding rent is a liability. Now, outstanding rent is also personal account. You have to pay to landlord. Outstanding rent is also personal account. You have to pay to landlord. Outstanding insurance. Yeah, that is also personal. All your liabilities are personal account because you have to pay to someone. You have to pay to someone. It can be individual, it can be company, firm. I have to pay to someone. All liabilities are always personal account. Assets may something, debtors, they are personal account. I have to receive from someone. Bill receivable, they are similar to debtors. Bill receivable similar to debtor. What is it? I'll come to it later. They are also personal account. The liability is always personal. It represents payable to someone, individual or to a firm, company. That firm, company are artificial legal persons. Okay, if you have outstanding liability, that's a personal account. I have to pay to someone. Drawings, capital, they represent owner. They're all personal account. Okay, the one is personal account. Second, real. Real accounts are for your assets, but not the debt. Liabilities are always personal. Liabilities are always personal. I just write down over here, all liabilities account. All liabilities accounts are always personal accounts. They're always personal accounts. Liabilities always personal. Assets may be, or else assets are real. They are the assets, not the debt. Example, I have this air condition. That's not a person. Is this a person? If I have a payable to the company from where I purchased, that's a person. But AC is not a person, machine is not a person, land is not a person, cash is not a person. That all is not a person. So they're all real account. They are assets, but not the debt. They are assets, but not debt. For example, land, building, investments, they are all real account. Cash and your bank balance are also real. Cash and bank are also real. Nominal account is your incomes and expenses. Sales, purchase, insurance expense, rent expense. See, rent expense is different, rent outstanding is different. Rent expense is an expense. Rent outstanding is a liability. I have to pay to someone. So these are all expenses, incomes, losses, gains. They're all expenses, income, losses, gains. I sell a air condition at a loss. Book may value 30,000. Yeah, I bought at 50. I gave depreciation first year 10, second year 10. Book may value 30. Sold at 25. Oh, 5 ka loss. That's a nominal account. Loss on sale of AC is nominal. AC is a real. AC account is a real account. Loss on sale of AC is a nominal. Nominal account are expense, income, losses, gains. Like salary account, interest account, commission received account. They're all nominal account. And nominal account are transferred to trading account or P&L account. Nominal account are transferred to trading account or P&L account. The net result of nominal account is reflected in P&L. Net result of nominal account is reflected in P&L, and then the net profit will be going to capital. The nominal accounts are temporary. Nominal accounts will go to P&L. From P&L we get net profit, net loss. That profit loss added to the owner's capital. Profit loss belongs to sir owner. So nominal account, incomes, expenses, they are transferred to trading account, P&L account, and from trading P&L the net effect, net profit, net loss will go to capital. The nominal accounts are temporary. Why are they temporary? They will be transferred to trading account, P&L account at year end. Okay, now rules for accounting. You classified accounts as personal, real, nominal. You classified accounts as personal, real, nominal. Now your golden rules of accounting. For personal account, you have a debit the receiver. For personal account, we have when should I debit? For personal account, you debit the receiver and you credit the giver. Okay, these are the rules. Debit the receiver, credit the giver for personal account. Personal account, debit receiver, credit giver. For real account, debit what comes in. Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. These rules you have to remember. Rules you have to remember, nothing to be done. So rules are to be remembered. Based on that, journal entry is done. For personal account, debit, receiver, credit, giver. For real account, if it's a real account, debit if it comes in, credit if it goes out. Nominal account, debit expenses and losses. What we should debit? Expenses and losses. Credit incomes and gains. Credit incomes and gains. Okay, for a personal account, debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. And for nominal account, expenses and losses are debited, incomes and gains are credited. Okay, so identify which accounts are affected. See whether it's a personal, real, nominal. Apply the rule. Identify the account getting affected. Which is the account getting affected? Understand whether it's a personal, real, nominal. Apply the rule and you find out whether it should be debited or credited. Let's see question. Let us see the question. Okay, from the following information, state the nature of account and state which account will be debited, which will be credited. State nature of account, which account will be debited, which account will be credited. Started business with capital 50 lakh through check. Started business with 50 lakh capital through check. Now tell me which account is getting affected. Started business with capital 50 lakh through check. This is your illustration number 1. This is illustration number 1. In your exams, you have to mandatorily write with black pen. I am writing with red because it's more visible. Exam may mandatory. You have to write with black pen. Yeah, for lines you can use pencil. For drawing lines you can use pencil. Okay, check your question. Started business with capital 50 lakh through check. Okay, the one, can I say bank account is affected? So I just write over here accounts affected. Just pay attention for a minute. Accounts affected. Okay, uska type personal, real, nominal, and whether I should debit or credit. Okay, so if I just see the first transaction number 1. A kind of table like this. Okay, the first owner started business by bringing capital. So one, I can understand the account affected is bank account. One, I can understand the account affected is bank account. Second, I can understand the account affected is owner brings money. We call it as his capital. So accounts affected is bank account and capital account. Okay, bank, which one? Personal, real, nominal. Bank, personal, real, nominal. So type. Bank, which one? Personal, real, nominal. Sir, it's real. Bank is a real. Capital is personal. Okay, write it together. Bank is a real account and capital represents owner. It's a personal account. Now bank. Okay, it comes in or it goes out. Bank balance comes in or it goes out. Think from business angle. Don't think from owner's angle. Owner gave for business. Money came in. Debit the receiver. Credit the giver was personal. Debit what comes in. Okay, so I have to debit. Bank is debit because it comes in. And capital is a personal account. Okay, the owner. Is he a receiver or a giver? Sir, he is a giver. He is a giver, so credit. I write in bracket because he is a giver. Okay, journal entry. So I understand what should be debited, what should be credited. Identify the two accounts minimum which are affected. Understand whether it's personal, real, nominal. Apply the rules and then see whether it is debit or credit. Second, salaries paid by check. Okay, salaries paid by check. So again, one is my bank account getting affected and salary is an expense. So salary account is getting affected. Salary is an expense. Salary account is getting affected. Bank is real. Some people call it bank as personal. This is X bank, Y bank, Z bank. I'm not going into controversies of that. Simple. You understand accounting. We're not going into controversies. There are somewhere you might find bank is taken as personal account. I take it as real. Salary is an expense. Nominal. Okay, now tell me, you paid salary. You paid salary. Bank comes in or goes out? Bank balance comes in or goes out? Goes out. Okay, so credit. The bank balance is going out. And salary, nominal account. Nominal account. Debit, expenses and losses. It's an expense. So it will be debit. Debit because it is expense. Okay. So I understand salary will be debited, bank will be credited. Identify two accounts, whether it's personal, real, nominal. Apply the rules. Third, I've taken a very simple example. Received rent in check. You got rent in check. Again, your bank account and your rent income account. Your bank account, you call it as rent account or rent income account, both are fine. You call it as rent account or rent income, both are fine. Okay, bank is real, rent is nominal. Bank is real, rent is nominal. Bank, you receive rent, it comes in. I write debit, it comes in. It comes in. And rent is a income. Incomes are credited. Check your nominal account. Expenses and losses are debited. Incomes and gains are credited. Fourth, purchased goods on credit. Okay, on credit means you'll pay later. Okay, on credit means you'll pay later. If someone has not written the rules, you can write it. You have the book with you, make sure you write it. Purchase goods on credit from Mr. A. I have to pay to Mr. A. I have to pay to Mr. A. And one, I'm buying goods. Purchase is my expense. Purchase is my expense. Some people say purchase, some people say goods are coming in. So if you assume goods, real account. If you assume purchase, it's basically if you treat it as an expense, so find nominal. Answer will remain same. Okay, the one is Mr. A account is affected. When you buy goods, it's either you call it as purchase account or some people call it as goods. Okay, so purchases. I take it purchase. Generally purchase, sale. Okay, Mr. A is a person. Personal account. Mr. A is a person, personal account, expense. This purchase account, some people call it as nominal. There are some people who also call it as real. It's a goods. Goods, asset. Goods are going out. Whether you take nominal or real, entry will remain same. Whether you take nominal or real, your entry will remain same. Either nominal or sometimes people say it is real. It is goods. Okay, now tell me, Mr. A. Mr. A, we sold or we purchased? Check. We purchased goods. We purchased goods. So Mr. A is receiver or giver? Mr. A is a receiver or a giver. We purchased goods. We received. He is a giver. Debit the receiver, credit giver. Okay, so credit because he is giver. Credit because he is a giver. And purchase account. If you treat it as an expense, expenses are debit. If you treat it as an expense, expenses are debit. Or if you treat it as an asset, real account, goods are coming in. The debit, either you take it as an expense or you take it as comes in. It is either expense or you can take it as comes in. Answer will remain same. So if you treat it as an expense, nominal account, yes, expenses are debited. If you treat it as goods, goods are coming in, real account, again debited. Goods are coming in. Next, fifth one. Sold goods for 8,16,000, received payment by check. Sold goods, we received payment. Sold goods, we receive payment by check. So check we receive, bank balance will go up. And sales, you sold goods, it's an income. You sold goods, it's an income. Okay, so bank is real. Sales, either you take it as income, that's nominal, or some people say it's real, it's goods. Goods going out. Entry will be same. Entry will be same. Okay, you sold goods, cash comes in. Real account, debit what comes in. Real account, debit what comes in. Okay, sales income. Incomes are credited. Or if you treat it as goods, goods goes out. If you treat it as goods, goods go out. Real account going out is credited. If you treat it as income, nominal account, incomes are credited. If you treat it as goods, real account, debit what comes in, goods are going out, credit. Ho gaya? So we understood two accounts getting affected. See whether it's a personal, real, nominal, and apply the rules. You'll understand what to debit, what to credit. But practically, I don't follow this. I don't follow this. These are called golden rules of accounting. These are called golden rules of accounting. I frankly don't follow this. I feel this is a bit difficult. Yeah. I feel this is a bit difficult. I follow modern rules of accounting. We just go down. This is modern classification of accounts. Modern classification of accounts. Modern classification of accounts rather than personal, real, nominal, simple. asset, liability, capital, incomes, expense. Over. Asset, liability, capital, incomes, expense. This is the classification. And what is the normal balance? Normal balance of an asset. Okay, asset has which balance? So normally asset has a debit balance. Normally they have a debit balance. Liability have a credit balance. This is you have to mug up. So sir, why asset has a debit balance? Asani, assets normally have a debit balance. So when we prepare a balance sheet, it's basically capital plus liability is asset. Capital and liability are credit balance. Asset is a debit balance. Then only they will tally, na? Debit aspect, credit aspect. So asset has a debit balance, liability credit, capital credit, revenue credit means income, expense debit. Okay, just remember this. Just remember this. Just remember this. Asset has a debit balance, liability has a credit, capital has a credit balance, income credit, expense debit. Okay, now just tell me, asset has a debit balance. Asset has a debit balance. Normally debit balance. If it increases, I should debit. It has a debit balance now. It has a debit balance. If it increases, I should debit. So when it should be debited? So debited when? And यहाँ पे credited when? So asset normally has a debit balance. When it increases, I will debit. When it decreases, I will credit. So when I should debit? It has a debit balance. If it increases, debit it. It has a debit balance. Again increased, debit it. If it goes down, credit. Okay, liability has a credit balance. It has a credit balance. If it increases, credit. Decreases, debit. The liability, when should I debit? When it decreases. When should I credit? When it increases. It is based on what is the normal balance. The assets normally have a debit balance. If they are debited, they go up. If they are debited, they have a debit balance. Again debited means they are going up. So when they are increasing, debit. When they are decreasing, credit. Liability has a credit balance. If liability goes up, credit. Liability goes down, debit. Capital has a credit balance. Capital goes up, credit. It has a credit balance now. Goes up, more credit. Goes down, debit. So debit when it decreases, credit when it increases. Revenue. Revenue means income. Income has a credit balance. If it is going up, credit. It has a credit balance. If it's still going up, more credit. Going down, debit. So decreases, it will be debit. Increases, it will be credit. Expense has a debit balance. So if it is increasing, debit. Decreasing, credit. Ho gaya. Now I will account as per this. I follow this. In the entire course of ours, whenever I am doing any journals, I will explain you as per this. Don't go for golden rules of accounting, you will confuse yourself. Sometimes you will have a doubt only, sir, this will fall where? Is it personal, real, nominal? Leave it simple as this. We will follow this while explaining, sir, I feel that one more better. Please understand this. I am not going to explain as per golden rules. I am going to explain everything as per modern rules of accounting. Nobody follows that golden rules now. Yeah, it's old, outdated, gone concept. Simple. Asset, debit balance, going up, debit it, going down, credit it. Liability, credit balance, going up, credit, going down, debit. Okay, capital has a credit balance. Credit balance going up, credit, going down, debit. Incomes have a credit balance. Going up, credit, going down, debit. Expense have a debit balance. Going up, debit, going down, credit. Okay, same question we solve by this method. Same question we solve by this method. Question number 2, I write over here accounts affected uska classification and whether I will debit or credit. Okay, first transaction, your bank and capital account. You started business by bringing money. Bank, capital, two accounts are affected. Okay, now bank is an asset. I classify in the 5 category. It is an asset. Capital is a capital. Capital is a capital. Okay, owner started business. Bank going up. Asset increases. Asset increases. Debit. Asset increases. Debit. Capital owner brought. So capital increases. Capital has a credit balance. Capital goes up. Credit. The asset increases. Debit. Capital increases. Credit. हो गया. No need to have that golden rules of accounting. This is more simpler. Okay, second transaction. Salary is paid by check. Your salary is paid by check. So again I have two things, bank and salary. Identify the accounts getting affected. Bank, salary. Okay, bank, asset, salary, expense. Okay, we are paying salary, asset goes down. Asset goes down, credit. Expense goes up. Salary, expense going up, debit. Expense has a debit balance, expense going up, debit. So see, one gets debited, one gets credited. One gets debited, one gets credited. Or I just write down over here, asset increases, capital increases, asset decreases, expense increases. I just write it over here, more easy to understand. If you have written at the end, it's fine. If you have written at the end, it's fine, don't worry. Third, rent received by check. So bank account, rent account. Bank account, rent is an income. Bank account is an asset, rent is income. We are receiving rent, asset goes up, income also goes up. Asset goes up, income goes up. Asset goes up, debit, income goes up, credit. Asset goes up, debit, income goes up, credit. Fourth, purchase goods on credit from Mr. A. So one is Mr. A account, second is purchases account. One is Mr. A account, second is purchases account. Mr. A, I have to receive. Mr. A, no, I have to pay. It's purchase, now. I have to pay. It's a liability. Mr. A, I have to pay. I purchase goods. It's a liability, and purchase is an expense. Expense is going up. Okay, I have to pay to Mr. A. Liability going up. You have to pay to Mr. A. Your liability going up. Liability going up is credit. Expense going up is debit. Expense going up is debit. You identify one is getting credited, one is getting debited. And the last, sold goods, we received check. Okay, so we sold goods, we received check, bank, and second is sales. Bank. Second is sales. Bank is an asset we are receiving, going up. Sales is a income going up. Okay, asset goes up, debit, income goes up, credit. Over. No need to go by personal, real, nominal, simple. Asset, liability, capital, income, expense. Asset going up, debit. Asset going down, credit. Liability going up, credit. Liability going down, debit. Capital going up, credit. Capital going down, debit. Income going up, credit. Income going down, debit. Expense going up, debit. Going down, credit. हो गया. This is question number 2. Let's move it. This is the modern classification and format of journal. This is your format of journal entry. Date, particulars, LF number, ledger folio number. From journal they are posted into ledger. From journal they are posted into ledger. So which page number of ledger? Which page number of ledger it is there? Uska reference. Debit side, credit side. One aspect debited, other aspect credited. One aspect is debited, other aspect is credited. Now, for the account to be debited, like here, if I see the first entry, which is the account to be debited, bank, I'll write bank account. Is customary to write debit. So see, for the account to be debited, the word debit is written at the end of the column. The word debit is written at the end of the column. For the account to be credited, we start with 2. For account to be debited, we'll write bank account debit. Okay, capital I have to credit now. I'll start with 2 capital account, and that too after leaving some space. For account to be credited, after leaving a little space, it is preceded by the word 2. Preceded. Pehle. By the word 2. But modern days mein we might be seeing debit word and 2 word are missed out. It is basically, it's customary. Wo custom hai. Rituals going on since ages. Kyun karte, nobody knows it. It's customary. It's not as per some law or act. It's customary to identify, okay, bank account debit and 2 capital. When I write 2 capital means that capital is credited. Okay. Explanation for the entry together with necessary detail is given in brackets. Okay, I do a journal entry, I'll explain what is this. I'll do a journal entry, I'll explain what is this. That is called as a narration. Okay, let's do it. For the first question, we are required to do journal entry. Same question, I have to do journal entry. Question number 3. Question number 3. Journal entries in the books of. Okay, I don't know. And journals are chronologically. Journals are always chronologically. Format. Date. I don't have a date. I'll keep it blank. I don't have a date. I'll write serial number. The date, particulars. Actually, we don't have LF number. You can skip it. If you don't have LF number, you can skip it. If you want, you can just write it LF number. Debit rupees, credit rupees. Debit rupees, credit rupees. This is the format. Date, particulars, LF number, debit, credit. We don't have a date. As dates are not given, serial number is written. As dates are not given, comma, serial number is written in date column. Serial number is written in your date column. Okay, number 1. Number 1 first. have a capital brought in. It was bank account debit. We write like this. It's bank account यहाँ पे debit. And credit wala we leave space and then we start with 2. We leave some space and then we start with 2 to capital account. See which account to be debited, credited we already found. ये रहा. If you just see यहाँ पे bank debit, capital credit. So bank account we have a debit at the end of that column, and credit wala we start by leaving some space to capital account. We don't have to write to capital account credit, no. It's just like this, bank to capital amount. If you just go and check, 50 lakhs. Okay, in debit side 50 lakh, credit also 50 lakh. Okay, the bank account is debited. Bank is debited 50 lakhs. And this is credited 50 lakh. Now how to write narration? It starts with being. How to explain the entry? How to explain the entry? It starts with being. Write anything. Nobody is going to read. Yeah, don't just write being human. Don't just write that. The being, capital of rupees 50 lakh brought by owner through check. Simple. Whatever is written in line, same copy paste. Capital, same thing, I will copy paste. Being, business started with capital 50 lakhs. Being, business started with capital rupees 50 lakhs through check. हो गया. Anything you write, nobody is going to read it, but it's mandatory. Whenever journals are there, narrations are mandatory. Okay, number 2. Second entry we had salary is paid. Salary was paid. Expense salary was debited. Cash is going away. Asset is going away. Credit. So salary account debit. Okay, salary account debit to bank account 50,000. Salary account debit to bank account 50,000. Being salary paid by check. Being salary paid by check. Third, please write it together. Rent received 20,000, not 2 lakh. Okay, rent received 2 lakh. When I receive, bank asset goes up, bank debit to income was credited. Either you write rent account or you can write rent income account. Either you write rent account or rent income account, 2 lakhs. Being rent received by check. Being rent received by check. Fourth, purchased goods on credit. Purchased goods on credit from Mr. A, 9 lakh. Purchase goods on credit from Mr. A. Okay, so Mr. A have to pay. Purchase expense goes up, debit. Purchases account debit. The expense going up, debit. Liability goes up, credit to Mr. A account. Amount 9 lakhs. Amount 9 lakhs. Amount is 9 lakhs. And the last one, number 5. And the last one, number 5. Sold goods, we got money by check. Sold goods, we got money by check. The asset in form of bank goes up, debit. Income, sales, credit. Income going up is a credit. Amount is 8,16,000. 8,16,000. Okay, I forgot the narration. Being goods purchased from Mr. A on credit. Being goods purchased from Mr. A on credit. And this is being goods sold for cash. Being goods sold through check, or sold by check. Being goods sold and payment received by check. Same thing, you should just copy paste. Payment received by check. हो गया. This is journal entries. These are the journal entries. Now we just see entry number 1 there is bank, second में there is bank, third में there is bank, fifth में there is bank. First, second, third, fifth, 4 entries are bank. We try to bring all bank things together. We try to bring all that things together through a bank account. तो वो ledger आएगा. The first is journal. We bring similar transactions together. That is called ledgers. That's classifying. Second stage. Copy the first stage, then I go to second. Copy the first stage. That is your journals. Now we'll go to ledgers. Then we'll go to trial balance. Then we'll go to final accounts. Okay. Now pay attention. This is done. This is done. This is done. Give journal entry done. Now ledgers. After your journals are recorded, they are classified. After journals are recorded, they are classified and grouped basically in ledger. So they are classified and grouped together. That is in ledger. Ledger contains all personal, real, nominal accounts, everything. So they will have all Mr. A account, bank account, salary account, purchase account, rent account, all accounts we prepare. All accounts we prepare. And this is called principal book of account. It is called principal book. Okay, if they ask book of prime entry. Book of prime entry. Prime means first the entry comes where? Journal. Book of prime entry is journal. Principal book of account is ledger. And it is in which account wise balance of each account is determined. So every ledger account has two sides. See, sometimes bank is debited, sometimes it is credited. I'm preparing bank. All transactions of bank together, sometimes debit, sometimes credit. So it has two sides. It has two sides, debit and credit. And every side has 4 columns. Date, particular, JF. This came from journal folio number where kaun si journal entry is posted. Which page of journal entry it is there. Date, particulars, JF rupees. Date, particulars, JF rupees. So 2 sides. This is debit side. This is credit side. Date, particulars, JF rupees. Date, particulars, JF rupees. Now how do I do posting? How do I do posting? See here, first of all, we don't have any balance. It's a new business for our question. It's a new business for our question. If bank account was debited, if we are preparing bank account, say I'm preparing bank account. If bank account is debited, here it will come on debit side. Narration will be of credit item, say to capital account. Narration will be of credit item. Now on debit side, it's customary to write to. On credit side, we write by. Say by, we paid salary. So it was salary debit to bank. So if bank account was debited in journal, here also it will come on debit side. If bank account was credited in journal, here also it will come on credit side. So see, the concerned account debited in journal should also be debited in ledger. If bank account is debited in journal, here also it's debited, but particulars may write to the credit wala account, but the reference should be of respective credit account to capital account. The bank was debited. Here also it will come on debit side. To, I'll write reference of the credit item to capital account. Okay, this side we write to, credit side we write down by. This side we write to, credit side we write down by. Okay, this is how we post it. And then we find a balance. If balance comes on credit side, like say he introduced 50 lakh. 50 lakh means the salary paid 1 lakh. Out of 50 lakh we paid 49 lakh balance. If there is a balance coming on credit side, it's called as a debit balance. So why it's a debit balance? Debit side is higher. That's why balance is coming on credit side. That's called as a debit balance. By balance, some people write carried down, some people write carried forward. It's carried down or carried forward, it goes to next year kind of. It's carried down or carried forward. And then, now sometimes ledgers are balanced every month. Sometimes ledgers are balanced every month, sometimes they are balanced weekly, sometimes they are balanced yearly. And then this balance next year becomes an opening balance. Next year it will become opening balance. This is a debit balance. Closing balance coming on credit side is a debit balance because debit side is higher. The closing balance coming on credit side is called as a debit balance, and closing balance coming on debit side is called as a credit balance. So I understand debit balance closing comes on credit side. Credit balance closing will come on debit side. So closing balances come on opposite side. But next time when they become opening balance, they will be on same side. Debit balance comes on debit side. Credit balance comes on credit side. So opening balances are on same side. Closing balances are on opposite side. Okay, so we use the word to and by. We already written that. And every account we open separate. For each account, a separate account is opened. Okay, that's it. Let's do it. For our question, we are required to do ledgers. Then we find out the balance. That is also fine. Nominal accounts. Nominal accounts are mostly not balanced. They go to trading and P&L. The nominal accounts, they go to trading account, P&L account. Their expenses, incomes, they go to trading P&L. वहाँ से net profit or loss comes. net profit or loss will come. Okay, so trading P&L में nominal account goes. That's fine. Going to illustration 4. Prepare ledgers for illustration 1. Okay, so we did journal entries. Now we have to prepare ledger. Okay, just see which accounts I need. Which accounts I'll need? I need bank account. I'll need capital. I need salary. Bank is there. I need rent. 1, 2, 3, 4. I need purchases. I need Mr. A. I need sales. Bank is already there. Okay, let's do it. Let's do it line by line. Question number 4. This is question number 4. These are ledgers of, we don't know who. If they give the name, you write down the name. I don't have the name, I ignore it. Ledgers of someone. Now we start with, first of all, bank account. Now we start with bank account. Date, particulars, date I don't have. Okay, particulars, your JF number and rupees. Again date, particulars JF number rupees. Date, particulars JF number rupees. Okay, I need the same format for everyone. Date, particulars JF number rupees. Now in bank there are many transactions. I need some 8 lines for bank. I need some 8 lines for bank. There are many transactions in bank. Date, particulars JF rupees. Date, particulars JF rupees. I prepare salary account, 3 lines, same format. I'm not writing again. Date, particulars JF rupees. It's deemed. I'm not writing date, particulars JF rupees. It's deemed. It's there. All question, all accounts. Bank account, then salary, then rent. Okay, rent account is also 3 lines. Then your purchases, Mr. A, this all 3 lines because only one item is there. Mr. A account, sales account. In all of it there's only one item, that's why I have lesser lines. Sales account. Okay, this many accounts we need. Format everywhere it's same. Date, particulars JF rupees. Date, particulars JF rupees. This is debit side, this is credit side. Date, particulars JF LF rupees. Date, particulars JF rupees. Date, particulars JF rupees. So bank, salary, rent, purchases, Mr. A, sales. Date, bank, rent. So I forgot capital, right? Capital. I forgot the capital. Let me have it at the end. I forgot capital. I prepare capital account at end. I forgot the capital. Debit, credit. Let's start. Let us start with this. Okay, first we have bank account debit to capital. Bank account debited. In your journal it's bank debit. In your journal it's bank debit to capital. So bank debited. In your ledger also bank may, it's on debit side. It's bank may debit side. And narration to capital account. To capital account 50 lakhs. JF I don't have anything, leave it. 50 lakhs. So bank debit. Here also it comes on debit side. Capital credit. Capital credit. It will come on credit side. And I'll write by. It will come on credit side and I'll write by bank account. So debit side we write down to, credit side we write down by. Debit side we write down as to, credit side we write down as by. Okay, bank is debited, it comes on debit side. Capital credited, it comes on credit side. Next item. Next item. We paid salary. Salary debit to bank. Salary debit to bank. Salary is debited to bank account 50,000. Salary is debited to bank. Bank will be credited by salary account 50,000. Salary account is debited, here also debit. Bank is credited, here also credit. Salary debit, narration is of the credit item, that is to bank. And bank credit, narration is of the debit item by salary. Next we paid rent, not paid, received. We received rent, so it is bank account debit to rent account 2 lakhs. Bank account debit to rent account is 2 lakhs. Bank debit and rent may there will be credited by bank account 2 lakhs. Next, we purchase goods. We purchased goods from Mr. A. Your purchase was debited. Your purchase was debited to Mr. A account is 9 lakhs. Purchase debited and Mr. A will be credited by purchases account 9 lakh. By purchases account 9 lakh. Sales. We did a sale, we got money in cash. We did a sales, we got money in cash. It's bank debit to sales 8,16,000. It's 8,16,000. Check it. Yeah, bank debit to sales 816. Bank is debited, sales will be credited. Sales will be credited by bank 8,16,000. Okay, done. Now you have to balance. You are done with all of this. Now you have to find out the balance. Okay, if you see bank, there's a missing figure coming on credit side. If you see bank, there's a missing figure coming on credit side. To balance carried down or carried forward. I generally write carried forward, brought forward. I generally write carried forward, brought forward. If you are habituated to write carried down, brought down, it's fine. Okay, 50 lakh plus 2 lakh plus 816 minus 50. 59 lakh 66,000. And we just have to make the total 60 lakh 16,000. Next time it will come as opening balance. Next time it will come as opening balance. Now this is for 1 month or it may be for 1 week, we don't know. It may be for 1 month or 1 week, we don't know. Balance carried forward, and I generally have a habit of circling what I found out as balancing. I generally have a habit of circling what I found out as balancing. Now tell me, closing balance came on credit side. Which is this balance? Closing balance came on credit side. Which is this balance? Is this a debit balance or a credit balance? Is this a debit balance or a credit balance? It's a debit balance. Debit side is higher. It's a debit balance. Debit side is higher. Okay. Next, salary. Now see, two options. Some people take it to P&L now only, and some people they carry forward and then take to P&L. I generally will carry forward then take to P&L. Some people take to P&L now only, or some people write like this: by balance carried forward 50. Now this is done. Now next time they will have to balance brought forward, and then they will write by P&L. They'll write by P&L. Now I write it by balance carried forward because we are not preparing P&L. We are not preparing P&L as of now. That's why I'm writing by balance carried forward. This is also debit balance. This is also a debit balance. Closing balance coming on credit side, it's a debit balance. Actually, salary go to P&L. As we are not preparing P&L, I'm writing like this. Otherwise, it will be by P&L. Otherwise, it will be by P&L. Okay, rent. It's an income that also goes to P&L, but we are not preparing. That's why to balance carried forward. This comes on debit side. This comes on debit side. It's a credit balance. This comes on debit side. It's a credit balance. 2 lakh. 2 lakh. Purchases by balance carried forward. Actually, purchase goes to trading. Actually, your purchase goes to trading account. We are not preparing trading. That's why they are carried forward. We are not preparing trading. That's why they are carried forward. It's a debit balance. Closing balance coming on credit side means a debit balance. Debit side is higher. Mr. A. Mr. A. There is 9 lakh. Please make sure you write together. The sums are very basic. Nine lakh. It is a credit balance. Mr. A is a credit balance. Closing balance coming on debit side. Sales. To balance carried forward 8 lakh 16. To balance carried forward 8 lakh 16. It's a credit balance. It's a credit balance. And last, your capital is also a credit balance. To balance carried forward is 50 lakhs. This is also credit balance. Closing balance coming on debit side means it's a credit balance. Closing balances come on opposite side. Opening balances come on same side. Closing balances come on opposite side. Opening balances come on same side. हो गया? Okay, so all bank transactions together, all Mr. A transactions together, all sales transaction together, all capital together. We have only one, but otherwise they all are brought together. Otherwise they all are brought together. Imagine salary we pay 12 times, all salaries will be together and we can find the total salary. Okay, I just write down one note for your understanding. I just write down one note for your understanding. As trading account and P&L account is not prepared, comma, nominal accounts, your incomes and expenses, nominal accounts are not yet transferred to trading account and P&L account. Are not yet transferred to. Your sales purchase goes in trading. Your other incomes and expenses goes in P&L. We'll learn that also. What comes in trading, what comes in P&L, we'll learn. Just finish this much. As trading account, P&L account is not prepared, nominal accounts are not yet transferred to trading account and P&L account. So actually, nominal accounts go to trading or P&L. They're not carried forward. Unka is trading P&L, only personal and real account. They are carried forward, they appear in balance sheet. Lots of water keeps you fresh. Do it fast. Come on, this basics. We are not started only intermediate. And if you think you know all these things, you can start with the chapter. Better is to revise it. Better is to revise it. Okay, next. This was your ledgers going to trial balance. From ledger, we prepared trial balance, which shows the summary of all the balances. Your trial balance is the third phase in accounting process. After posting the ledger, it is a statement. Ledgers was a book. This is a statement which shows the debit and credit balances. Only the net balances it shows. It shows the net balances, and trial balance should tally. If trial balance tallies, you understand there is arithmetical accuracy. Clerical mistakes are not there. Okay, format. We have serial number. Ledger ka name, uska balance is debit or credit. Ledger's name, LF number, which page number it is there. It is which page number it is there, and this must be equal. Total of debit side, credit side is equal because we followed double entry system. We debited 50 lakh, so we have credited 50 lakh. So debit credit side trial balance total has to be equal. It has to get tallied. Let's see our question. This is your question number 5. We prepared trial balance. Okay, question number 5. This is trial balance is always as at. They are the balances as at this date. Trial balance as at. Whatever date is there, we don't know. Okay, so it is, leave serial number. I write particulars. That is your name of account. Okay, they write ledger account. I write ledger account. Some people write particulars. Then also it is fine. Ledger account. Which page number they are, we don't know. Debit rupees, credit rupees. Whether it has a debit balance or a credit balance. Whether it has a debit balance or a credit balance. Write down all our accounts. Write down all our accounts. Bank account, capital account, salary, rent. Just write down all your account. Purchases, Mr. A. All your accounts you write down, and sales. I think we had this many. Write down all your accounts. Unka balance. Closing balance coming on debit side is a credit balance. Closing balance coming on debit side is a credit balance. Go and check the balances. Bank, closing balance on credit side. It's a debit balance, 5966. Okay, this is 59,66,000. Salary debit balance 50. Rent credit balance 2 lakh. Rent, capital is, this is capital. Capital has a credit balance 50. Check the last account. Salary debit balance 50. Rent credit balance 2 lakh. You can go and check your account. Okay, if you just see capital, missing figure comes on debit side. This is a credit balance 50 lakhs. For capital, it's 50 lakhs. Salary was 50,000. Rent is 2 lakh. Purchase was a debit balance 9 lakh. Purchase was a debit balance 9 lakh. Mr. A is a credit balance 9 lakh. And sales is a credit balance 816. Make the total, this should get tallied. Make the total, this should get tallied. This is trial balance. Okay, 5966 plus 50,000 plus 9 lakh. 69 lakh 16 is debit side. This also will be 69 lakh 16. Minus 50 minus 2 lakh minus 9 lakh minus 8 lakh 16. It's tallied. It is tallied. This is the trial balance. The balances from ledger comes in trial balance. From this, we prepare our final accounts, trading, P&L, balance sheet. Yeah, the last step. From this, we'll prepare trading, P&L, balance. If trial balance tallied, arithmetically it's correct. It doesn't mean there can't be any errors. Arithmetically accuracy is there. It doesn't mean there can't be any errors. For example, salary, if you put it in rent. Salary, if you put it in rent. So one account debit, one account credit, trial balance will tally. Salary, you put it in rent, one account debit, one account credit, trial balance tally, but still there is a mistake. So error of principle. Your concepts are wrong. You don't know which account should be debited. Yes, salary tha, you are debiting rent. That is basically there. Your concepts are wrong. So principle ka error. Or compensating. Now actually principal error is your asset, you treat it as an expense. Like you buy a AC, air condition. You're not selling air conditions. You're not selling air condition. So you should debit AC account. But you debit purchase account. Instead of debiting AC, you debit purchase. Trial balance will tally. One debit, one credit, trial balance will tally. But it doesn't mean that your accounts are 100% correct. Arithmetically, there are no totaling mistake or nothing like that. Arithmetical accuracy is there. Still there can be error. Error of principle, compensating error. Imagine, यहाँ पे in purchase you write 1 0 less. And यहाँ पे also you write 1 0 less. ये 9 lakh था ना? 9 lakh. You wrote 90. Trial balance will tally because both sides you have written 1 0 less. So there is a mistake on debit side. It is compensated by a mistake on credit side. There is a mistake on debit side which is compensated by a mistake on credit side. That's compensating error. Trial balance tallies. But the effect of one or more error is nullified by other one or more error. You have a mistake done on debit side, it's nullified by a mistake done on credit side as well. This is trial balance. From journal, we went to ledger. Ledger say trial balance. Now we go to trading, P&L, balance sheet, nominal accounts. Your nominal accounts will go in trading, P&L. Your personal real accounts come in balance sheet. Okay. So going to final accounts. Going to final accounts. Pay attention. Okay, final accounts. We try to find out the profit and we understand the financial position. We try to find profit. Profit is through trading and P&L. Financial position is through balance sheet. We try to find out the profit for the year trading P&L, and we understand what are our assets and liabilities at the end of the year. What are the assets, liability at the end? That is balance sheet. Okay, now trading. Your profit is measured at two levels. Your profit is measured at two levels: gross profit, net profit. Trading account gives gross profit, P&L gives net profit. Trading account gives gross profit, P&L account gives net profit. Now what is gross profit? What is gross profit? Sales minus cost of goods which are sold. It considers only goods ka cost. It considers only goods cost, not the indirect expense. So salary of staff, rent, insurance, printing, telephone expense, advertisement, wo sara, that all is not covered in trading. Trading is a gross profit, gross. My goods of 100 I sold for 120. So sales minus cost of goods sold. The GP is a difference between sales minus cost of goods sold. So now in your trading, you will have a sales, you will have a cost of goods sold, and you get GP. So this considers only the sales and the cost of goods which are sold. Cost of goods which are sold. It doesn't consider indirect expense. Indirect expense will come in P&L. Okay, so this is just kind of gross profit. Goods of this, you sold for this. Then your indirect expenses, then you get the net profit. How to find COGS? How to find cost of goods sold? Cost of goods which you sold. You had opening mein this many. You purchased this many. Still something are in stock. The opening you had 100 units, purchased 1000 units. Still you have something with you. Remove that much. They are not sold. The opening stock plus purchases plus purchase related expense. Purchase related, direct expense, not indirect. Purchase related expense. They come in trading. Like I bought goods from Bombay. I bought the goods from Bombay. From Bombay I have to bring it to Bangalore. From Bombay I have to bring it to Bangalore where I am selling. Wo carriage inward or freight inward for bringing the goods. For bringing the goods. They are all direct expenses related to purchase. Direct expenses related to purchase. Okay, so opening stock plus purchase. Purchase related expense minus closing stock. Minus closing. Sir, why are we deducting closing? They are not sold yet. So that's not the cost of goods sold. I want cost of goods sold. Unsold है उसको निकाल दो. Out of opening, purchase, something unsold, remove it. Remaining is cost of goods sold. Okay, put it in account form. Put it in account form. Debit side, I have this opening stock. I have this purchase, less purchase return. I have this purchase related expense. And opposite closing stock. Now just see, what is this? Opening stock, purchase, purchase related expenses, closing stock. What is this? Opening, purchase, purchase related expense, opposite mane minus closing. This is COGS. This cost of goods sold, and this is your sales. Ye sales, ye cost of goods sale, balancing is GP or gross loss. Balancing is GP, gross profit or gross loss. हो गया. Balancing is GP, gross profit or gross loss. Okay, the opening stock, purchase, purchase related expenses, ये 3. Opposite there is closing stock. Opposite there is a closing stock. Then indirectly it's minus. So this is your cost of goods sold. This is your sales. Your sales minus COGS I'm getting is GP. So trading account gives you GP. Trading account gives you GP. GP is carried to P&L. Now P&L starts with GP. Your P&L will start with GP. Now I tell you again. If GP came on this side, in P&L it grows like this, crisscross. It always goes crisscross. So P&L में GP will come on credit side. Now this is GP, other income, not by sale of goods, not by sale of goods. आपका investment income, discount received from your creditor. Creditor gave you some discount. You have to pay them 100. You paid early, so they accepted 98. You have to pay them 100. You paid early. That's why they accept 98. These are called other income. Non-trading. Non-trading means not related to business. These are not related to normal business. It's not your normal business income. Goods sold wala nahi hai. This is not goods sold. This is property given on rent, dividend from shares. So they are not related to normal business. Any abnormal gains. Air condition sold off. I told you, I bought at 50, 10 depreciation, now value. I bought at 50, 10 depreciation, now value. How much? 30. Sold for 32. So ye sare gains, abnormal gains, they all come in P&L. Only goods related thing come in trading. It is sales, sale of goods, only that. And cost of goods sold. And the cost of your goods sold. All other things comes in your P&L. Now same way all other expense. Your management expense. Like salary, office rent, telephone, insurance, audit fee, legal charge, maintenance, repairs, depreciation. Selling expense. वो salesman का commission, advertisement, go down rent, carriage. क्या लिखा है? Outward. If you go in trading, the word written was carriage inward, freight inward, wages. आपने goods खरीदे. From Bombay you purchase goods, the workers were used to put it on truck. Workers were used to put it on truck. When they come you remove it. That is all wages. Wages comes in trading. Wages comes in trading, salary comes in P&L. Wages comes in trading, salaries of your staff, they come in P&L. Okay, selling expenses, finance expense like bank loan ka interest. Customer paid you early, you gave them discount. Customer paid you early, you gave them discount. Abnormal losses, loss on sale of machine, loss by fire. And then we have the net profit. यहाँ पे opposite this side is net loss, which goes to partners capital. We have a net profit, net loss going to partners capital. Trading account gives you GP, then all your indirect expenses plus incomes which are not related to business, they all will come over here. Indirect incomes will come and not related to business. Indirect and non-trading, not related to business. They all will come. And then we have a net profit, net loss going to partners, going to your capital. Owner's capital, it will be added. Now comes balance sheet. Balance sheet is a statement. Again, this is a statement. These are all summary, which shows assets and liability at a certain date. Trading P&L is for the year. वो profit loss for the year. See, it's for year ended. Trading P&L is for year ended. Here also for year ended. Trading account, P&L account are for year ended. But balance sheet is always as at. Balance sheet is always as at. It's as at a given date. Now, in your balance sheet, personal and real accounts come. Nominal accounts have gone to trading P&L. Uska net effect, profit loss will be coming in your capital. Net effect will be coming in your capital. Now, for a sole proprietorship partnership, there's no format of balance sheet. Format of balance sheet is not there. But one side will have capital and liabilities. Second side we have assets. यहाँ पे it will be capital and liabilities. This side we have assets. Capital and liability, this side is assets. Capital will also come. Capital, liability, they have a credit balance. Asset, debit balance. It should get tallied. Capital, liabilities, credit balance. Asset, debit balance. See, whatever you debited, same amount you credited, it should get tallied. Now, sir, how do I prepare? You say there's no format. Yeah, there's no format. This is basically the basic structure. Inside, we either follow order of liquidity. We either follow order of liquidity or we follow order of permanence. Either order of liquidity or order of permanence. Order of liquidity. Order of liquidity means the liquid items will be first. Illiquid, जिसको बेचने में बहुत time लगेगा, that is last. So cash is the most liquid. Today it's there, tomorrow you might give it to someone. Today it's there, tomorrow you might give it to someone. It starts with cash. It's liquidity. This is liquidity. And your land and building will come last. Liquidity. This is which will be realized first. Same way liability, which is to be paid first. Which is to be paid first. Creditors, bills payable, they come first. Owner ka capital have to pay last. That will be at the end. Owner ka capital have to pay last. It will be at the end. Permanence approach. Permanence approach. The asset which will be realized last. Jo permanent hai, which will be there more. Take that first. The land and building first. Cash last. Okay, this cash opposite side. Here it will come cash. Okay, this all actually will come on this side. This all four will come on this side. It's a typing mistake. Investments, government securities, bank and cash. This all will come on this side. Liquidity में cash first, land and building last. Permanence. Land and building is more permanent. Cash कल चला जाएगा. तो land and building first, cash last. Here, capital is more permanent. That is first. Your creditors, bills payable last. Creditors, bills payable last. So this is one way. Now there's one more thing they've given. We generally bifurcate asset as current, long term. Current are those which will be realized within a year. Current are those which will be realized within a year. So assets are classified in two parts. Current, which are to be converted into cash within a year. So within a year you will realize. If I have a land, I don't plan to sell it. That will be long term. But I have a debtors. I sold goods. I'll realize money in 2 months. I sold goods, I'll get money in 2 months. That's a current asset, which will be converted into cash generally within a year. Long term, which are to be used for a long period. And usme bhi long terms are again divided in two parts. Tangible, intangible. Tangibles are those which you can touch, see. They are tangible. Land and building, machine, furniture, they are tangible. Intangible. Copyright, patent, goodwill. You can't touch it. That is intangible. The intangibles have no physical substance, cannot be seen. Example, patents, copyright. Balance sheet में long term asset में tangible, intangible generally we show separate. I told you there is no format. Sole proprietorship, partnership, there is no format, but we tried to show separately. Liability same way. Current, long term. Current means which is to be settled within a year. Current is which is to be settled within a year. Long term, wo bank loan taken for 5 years. I'll pay after 5 years. So that will come. Okay, so sole proprietors generally present balance sheet in horizontal form. They don't have any format. no specific format. Capital liabilities on left hand side, assets on right hand side, and generally we follow order of permanence. Generally we follow order of permanence. So it starts with capital. Here it starts with tangible fixed asset, then intangible. Tangible, intangible. Then comes long-term loans, short-term loans, current liabilities. This is not the format to be mugged up. There is no specific format for sole proprietors, partnership. Don't mug up the format. Don't try to remember, just for understanding. Starts with capital, that is long-term liability, current liability. Okay, long-term asset mein tangible, intangible, then comes your current asset. Then comes your current asset. And it's very clearly written, there is no hard and fast rule. There is no hard and fast rule to prepare it in above way, no. There's no hard and fast rule. The model presentation is just for understanding. The model presentation is just for understanding. There's no hard and fast rule. And last, the note. This is for sole proprietors partnership. Sole proprietorship, partnership, no specific format. Companies. For companies, format of balance sheet as well as statement of P&L. We don't have trading account for companies. Companies don't have trading account. Sales, purchase, everything is in P&L. We don't find GP, NP separately. Only NP. So for your companies, balance sheet ka format and statement of P&L is given in Schedule 3 of Companies Act 2013. The balance sheet format, statement of P&L. They don't call it as account. They don't call P&L account. They call statement of P&L. It's already there in Schedule 3 of Companies Act, and they don't have this horizontal format. They have vertical. Ye horizontal tha. What is this horizontal? We have capital liability on one side, assets on other side. Capital liability one side, asset on other. Vertical mein capital liability at top, below asset. So capital liability at top, below assets. We'll learn Schedule 3 formats in detail. We'll learn Schedule 3 formats in detail. We have a chapter, Final Accounts of Companies. We have a chapter, Final Accounts of Companies. Schedule 3 gives only vertical format. We'll learn the formats in the chapter of Final Accounts of Companies. That's for your basics. This is for your basics. We started with meaning of the word accounting. Then we understood objectives of accounting. We understood accounting involves what? Recording, classifying, summarizing, analyzing, interpreting, communicating. To whom? Users. Who are the users? That we understood. We understood concepts in accounting, or different accounting concepts. Entity concept, matching concept, accrual concept, all that. That we learnt. We learnt accounting standard, Indian accounting standard. We learned journal, how to do the journal entries. Golden rules of accounting, modern rules of accounting. I told you I will not follow golden rules for explanation. I'll try to follow that modern rules. Asset, liability, expense, income, capital. That 5 parts we divide. And we'll understand accounting. From journal it goes to ledger. From ledger it goes to trial balance. And from trial balance we prepare our final accounts, that is trading, P&L, balance sheet for a company. We don't have trading account. It's only balance sheet and your statement of P&L. For sole proprietorship, partnership, there's no format. Generally, we prepare horizontally. For a company, formats are given in Schedule 3. We follow vertical format. Then with this, tomorrow onwards, we'll start with the chapters. Tomorrow onwards, we start with the chapters, and just one sentence for you. I'll always say something at the end of the class. Just one sentence for you today. Success is not by doing great things. Success is not by doing great things. It's just by doing small things with great discipline. Many people ask me, sir, how to crack all the exams in first attempt, how to get all India rank. It's not by doing great things, nothing great, just small things with great discipline. Make sure you attend all your classes. Make sure if you're seeing your video lectures, you're sitting properly on a study table and you're seeing it. You do your homeworks on a regular basis. You go and revise whatever is done in class. Whatever you did today, just go and revise it. I don't tell you to solve each and every question again. No need to solve each and every question again, but go through it. So just small things with great discipline you follow and you'll be successful. Okay, see you all tomorrow. Tata, bye-bye, take care. Hope you enjoyed the basics.